Hi there, welcome to Kneppy Invest, and welcome to May the 7th, 2024. 1 hour of trading left, and we've had a really good day on the market. In fact, we've had a nice little pop up around about 2:30 p.m. when the Reserve Bank made a decision on interest rates, and for some reason the market was a little surprised. Maybe it was some commentary, I have no idea, but I will show you a tweet from Jessica Amir from Umumu, and I actually really like her. She does, on occasion, is on Osby's The Core, and I love her voice and just what she says about companies. I really like her for some reason. I don't know why. But anyway, today, not only has it been a good day on the market, I today will be a day I remember for quite a while because it is today that I've done something I've never done before, and that is average up in a position. And averaging up means you already own a position and the share price has gone up, and then you buy some more shares. And I did that today. I'll talk about why I did that today when we look at the top 5 announcements of the day. So we'll show you a couple of tweets in regards to what's happening right now in terms of macro. I think one of them is definitely macro because it's the interest rates. And then, yeah, the other two are sort of semi-macro. And then we'll have a look at the top 5 announcements of the day after going through what happened on the ASX, including the best performing, worst performing companies. And the top 5 announcements of the day include AGL, Lindsay Australia, a company with a ticker code TTT, Titomic or something like that. A company I've never looked at before, but they released an intriguing announcement today. Sims Metal and SKS Technologies. Now, within these 5 announcements, there was 1 profit upgrade and 2 profit downgrades. And there's about 6 companies that did not quite make it into the top 5 announcements of the day. And I might touch upon these companies. Now, what I'm thinking is I should just stick to the top 5 announcements of the day and just mention what companies just missed. And maybe I'll do that and I won't look at these other 6 companies. So before we have a look at what's happened on the ASX today, and hopefully your portfolio is up pretty big because just based off the indices here, everything's up by over 1%, including small caps up by 1.47%. Let's have a look at a few tweets. And this is a tweet that was released not long ago. So 2:42 p.m. So that's actually 28 minutes ago. 659 views. So, it's not massive, like 1 million views. But anyway, RBA board is not ruling out anything in or out. Today's statement spells higher for longer rates, which I thought would be taken negatively by the market, but no. Share price actually did pop up, and I'll show you the chart, like the 1-minute chart for the XGO. And do not expect rate cuts, for goodness sake. RBA says we need to be confident inflation moving sustainably to target. They also said board will reply on data, assessment of risk. Cash rate held at 4.35% as expected. So for some reason, this is I can show you this through Trading View because it's 20 minutes ago or over 20 minutes ago. So if we have a look, and Trading View is about 1 minute delayed on the ASX. On the ASX, excuse me. The ASX one is 1 minute delayed, but the Nasdaq and New York Stock Exchange is actually not delayed, which I find intriguing. And so this is the 1 minute chart for the XJO, and right on 2:30, or right about 2:30, maybe it wasn't right on 2:30. Yeah, it was actually right on 2:30. There you go. The XGO jumped up 0.15%, which may not seem a lot, but then it just kept on rising. So for some reason, the market liked what the RBA had to say. I don't know why. It's just based off their wording and the limited wording I have seen. It seems like there's maybe not promised interest rates cuts, but those expected interest rate cuts may not happen this year because inflation's looking like it's a little bit more sticky. But I'm not going to go against the market in this case. The market liked it, and the market is up, and we've had a really good day in the market. In fact, the daily chart looks pretty good. XGO has rebounded really nicely the last, in fact, 4 days in a row up. And in fact, if we don't see a big drop through the next hour or so, this will be 4 really bullish, we'll say 3 really bullish candlesticks in a row. And what I mean by candlesticks, if you look at the one-day candlestick, the market's just gone up during the day. So it's open near the bottom of the candlestick and closed near the top. So almost a perfect candlestick without any shadows. It's like a bearish shadow or bearish candlestick would be when you have a high shadow or shadow to the top of the main body. And a bullish candlestick is when you have a shadow below the main body, which tells us there's a lot of buying. We can see that on this day here, the 19th of April, we had that long shadow below the main body. So there was a lot of buying when the X shadow got to about 7,500. And the same thing happened on the 14th of February. Almost exactly same candlestick or one-day candlestick. So 3 really good days in a row, just looking at the candlestick. So fairly bullish right now, and doesn't mean it's going to continue tomorrow because we are correlated to what happens on the American markets. And if they are down 5% or so, we will be down big. Why could the American markets be down 5%? Who knows? Maybe we discovered there's an asteroid heading straight for Earth in a month's time. And, well, actually, if that's going to happen, the market wouldn't be down 5%, it'd be down by 50% or maybe even more. But anyway, we just don't know. It could be down 5% for any reason. We can't forecast the future. Anyway, so that's the RBA. Now let's have a look at a few other tweets. So this one is from Game of Trades. This is sort of a follow-on from yesterday. This is the longest yield curve inversion since 1929, but the recession is still no-show. Is this time different? And then he goes through, or she goes through all these reasons, talking about the economy is strong with real GDP growth at 2.5%. Unemployment is at historic lows, and the stock market is robust as well. While the economy is still definitely expanding, we believe we're nearing the end of that expansion. I'm not so absolutely sure about that, but to contract, there has to be a catalyst. The 1990 recession was preceded by tight credit and inverted yield curve, but it actually took an oil shock to trigger the downturn. I suppose that could happen again. The 1990, 1970s, and 2007 recessions were all triggered by rapid 40% increases in oil prices. So maybe we can see where they're going from here. Like past recessions, 2007 was also catalyzed by a 40% surge in oil prices during a time of tight credit and inverted yield curve. So what is going to be the next catalyst? An oil shock, a tech crash, another pandemic. Historically, oil shocks have been the most common recessionary trigger. 70s, 1990, 2008 recession. Is that the big risk now? And it keeps on going. With oil up and rising geopolitical tensions in the Middle East, a significant oil shock could be an ominous sign. Oh, they keep on going. Oh, keep on going. This is the longest thread ever. I'm not going to go through all this. Today's market is just expensive as 2019-29. Well, yeah, I would fight. I'd probably argue against that. Well, they keep going. Geez, this is longest thread ever. I'm going to go through this again. I actually agree with them in terms of oil. Oil is really important because if we have heightened oil prices, that would be not good for inflation. That would lead to higher inflation than expected because, if you have to fill up your car every single week, and some people have to fill up their car maybe twice a week. Fortunately, I don't drive around a lot, and I fill up my car maybe once every month or 2 months. So it doesn't really affect me. So I get around mostly by walking. So I have a supermarket up the road, go there every single morning. I sometimes take my dogs out for a nice little day out. But most of the times, if I'm going out, I just walk around. But anyway, a lot of people have to, like, for instance, my sister and brother-in-law, they're both teachers and they live maybe 30 kilometers from where they work. And so they have to fill up maybe twice a week. Maybe once a week. Maybe twice a week. Because they have 2 cars. So that does heighten fuel prices will be really negative for the economy, as this Game of Trades have pointed out. But I'm going to go through this because I didn't realize it was so long. So that's Game of Trades and talking about potential catalysts for us moving into recession and heightened or increased or elevated, that's a good word, elevated levels of oil could be the reason. We're already seeing it here. For some reason, oil prices are higher than they should be. That's just my opinion. I go to the SE data again, and this is regarding why possibly why things may not turn out as bad as we expect because of strong earnings in the United States. The current earnings season is on track to be the strongest in more than 2 years. On average, companies reported earnings 7% above expectations, and that's the most important thing, whether earnings are above or below expectations. The largest margin since Q4 2021. And you can see around about COVID-19 and just after COVID-19, earnings were much higher than expectations because I'd say most analysts were quite bearish back then. And so that's why there was earnings surprises for about 4 or 5 quarters. So this was a good quarter in America because earnings were better than expected. And then Kobe letter tweets always get a lot of 47,000 views. I've seen some of their tweets get like 1 million views. And then people always fight back, always say stuff that's against whatever they're saying. So statistics are funny things. Beating significantly lowered expectations by 7% is not worthy of a victory lap. No, it is because it's better than expected. That's the main thing. It's all about expectations. And if we're performing better than expected, that's actually a positive thing. It's not a negative thing. So everyone's got an opinion, that sort of thing. Everyone's allowed an opinion, but doesn't mean they're right. Okay. So let's have a look at the ASX today. 40 minutes left in trading, normal trading, and then we have the 10-minute closing auction. So 50 minutes left and 1 hour and 10 minutes left before I can have a look at TradingView and go through some of my technical holdings just to see if some of those are nearing a sell. After today, more than likely not. And am I regretting selling some companies last week? No, it's all about risk management. At that point in time, we looked a little bit more bearish, so taking risk off the table. And now I'm adding companies to my portfolio because we're no longer as bearish as we were last week. Anyway, so let's have a look at the ASX today. So everything's up. So do I really have to say anything? Let's have a look. Sectors, any bad sector? Utilities has had a really good day, up 2.7%. Staples, the worst performing sector, and that's still up 0.84%. Gold's had a good day. In fact, everything's had a good day. And maybe apart from the banks, only up 0.67%. And I think that's probably because of ANZ Bank. They did release the half-year results, and the last time I looked, the share price of ANZ Bank was down. Let's just confirm that. Yeah, still down. They were down by a little bit more. Obviously, the share price has rallied because of interest rates. Yeah, just look at the candlestick there in CommSec. It has rallied. Got down as low as $28. Actually, $27.99. Chart for ANZ, it's not looking as good just based off this CommSec. So not surprising that bank sector being the weakest. Just going to have a look at by change. I'm just going to click on I don't know why it's called 200 banks, because there are not 200 banks on the ASX, and there's not a list of the banks in there. But I'm assuming most banks are doing okay today. I'm pretty sure NAB went ex-dividend. Today. Down 1.64%, which is probably a sign they did go ex-dividend, and their dividend was 84 cents, and the share price down 57 cents. I was just raining outside. Okay, excellent. And yeah, just lost my train of thought then. So everything's up. So I'm hoping every single investor watching this video has had a good day today. But maybe not, because if we look at the top losers, there's some companies that are down a fair bit today, particularly small cap companies who are illiquidly traded. For example, Octus Investment Group down 23% on $2,300 traded. Savannah Goldfields down 20% on 3,962 shares traded. Not $3,960 worth of shares traded. And ASF Group down 18% on only $644 worth of shares traded. All those companies had a really low market cap. So what I'm looking for here is high turnover. Now, there is a scan here called unusual turnover. High, no, not a high. It's unusual volume or something like that. But you can just look at turnover, and you can just see most of the turnover is very low. So we have to go down list here. So in fact, we don't even see a company with over $1 million traded today. There we have one. Omni Brujoy, which is a law company. I have no interest in law companies. Down 11.43%. I did not see an announcement from that company. Even if I did see an announcement, I probably would have moved on to the next company. And so, yeah, overall, we've had a good day. So let's have a look by market cap. Now, there should be 2 companies on this list because both these companies made it into top 5 announcements of the day, and they're both profit downgrades. And there it is. Lindsay Australia is the first one on this list, down 6.8% on a profit downgrade. And I'm not seeing the other company here. It would have been up the top. That's Sims Metal. Let's have a look at Sims Metal. Maybe this wasn't a big profit downgrade. No, it's still down 5.84%. So it wasn't down quite enough to make it on this list. And you can see here, Lindsay Australia is the most valued company on this particular list at a market cap of 278 million. So most of the big cap companies have had a good day. In fact, if we go back to the ASX 20, is there any company down? One company has fallen in the ASX 20, and that should be, well, according to this, ANZ is now up. So the only companies down, there's 2 down now. Only companies down are NAB and now ANZ, but NAB's gone ex-dividend. If you take away that dividend, they would be up. So a really good day on the market, and the best performing ASX 20 is REA Group. Go REA Group. Okay, so that's the best or the worst performing companies on the ASX. Nothing out of the ordinary there, no surprises. So let's have a look at the top gainers. See if I missed anything here. There's Titomic, TTT, easiest ticker code to remember, up 37% on pretty good turnover, and there is a reason behind that. Up 105% now for the year. In fact, the chart looks pretty good. I had a look at the chart before I started recording this video. Otherwise, there's no other announcement here that I can remember where the company did release an announcement. There's a company called Emu, up on $256. This company called IKEGPS Group did make it into my honorable mentions, up 15.6%. A little bit surprised by that, but I suppose that's a fairly low turnover. So maybe there was a little bit of excitement, but not a lot. By market cap, AGL. I fully expected AGL to be on this list, and it has not disappointed. Another company that did make it into my honorable mentions is HMC Capital, up 6.8%. So that's interesting. Tourism Holdings has a nice bounce today after they released a horrific trading update yesterday, a profit downgrade yesterday. Set One Clothing has had a nice bounce, 7%. I took profits in that company, but still holding a small chunk. I think I sold at $1.55, so still below where I took some profits. And that's about it. Hancock and Gore released their results yesterday. I have no idea what they do. Mark up 105 million, but fairly low turnover. Okay, so that's the top gainers of the day, and that is the ASX today. Pretty good day on the markets. You can't be disappointed about what's happened unless you think the market should go up 5% every day. But if it did that, the valuations of companies in the world would be extreme. Like AGL Energy would have a market cap of, instead of 6.7 billion, it'd have a market cap of 6.7 trillion if the market went up 5% every single day. Okay, so let's have a look at the announcements of the day. So 6 companies did make it onto my honorable mentions, and they are, I'll do this fairly quickly, AL3, so AML3D. So have a look at the, up 15%. So have a look at the announcement that caused a little bit of interest in the companies, or lack of interest. No, there should be interest in all companies. And then we'll have a quick look at the chart. So new US defense contract builds alloy capacity. So this had a chance to make it in the top 5, I'll be honest with you. But a $1.54 million purchase order, a company that has come onto my radar recently. This is a 3D printing company. Pretty sure they are. So if you don't know what a company does, just have a look at an announcement, and most companies will have an about section. So disrupting, they are disrupting, utilizing new technologies to pioneer lead metal additive manufacturing globally. So 3D printing. And let's have a look at the chart for AL3. I'm not sure if the chart is good or not. Yeah, it's just going sideways. Nothing too exciting here. This is not a breakout. And the whole reason I do go through this process is I'm looking for breakouts. And this is not a breakout. Next on the honourable mentions, we have ANZ, which is flat today. They released their half-year results, and to be honest with you, are they doing a share buyback? Yeah, notification of buyback. There they are. They're following suit with the other banks, thinking if they announce a buyback, then the market won't sell off on these disappointing results. And these were, I wouldn't say disappointing results, but these are the sort of results you expect from a bank. No growth at all. And unlike some of the other banks, the share price has not rallied. And as we look at the chart for ANZ, share price was in a nice little upswing, and I think that upswing has now gone away. Interesting day today. Interesting day today, but I was trading this, but I'm not trading it anymore. So I'll get rid of all that. So, yeah, I think the uptrend has come to an end, and I still think ANZ would be the most attractively priced out of or valued out of all the banks. P ratio is 12.7. I don't know what the PB ratio is, but that's one thing I do look at with banks is price to book. But I look at both. I look at price to earnings and price to book. And unlike CBA, ANZ's P ratio is a little bit more attractive. I have traded ANZ Group in the past, well in the past, and I bought some shares when the P ratio of the company went below 10. It only went below 10 for a brief period of time, and then I sold fairly quickly because share price rallied. That's when I might become interested in the banks when they get to attractive valuations, because you don't expect growth or much growth in the future. Okay, another company was their IKEGPS, up 11.7% on, here it is, IKE closes major multi-year subscription deals. These are sort of announcements I don't really favour over trading updates. So trading updates, profit upgrades, profit downgrades are my favourite type of announcement. The reason they're my favourite type of announcement because these can lead to significant re-ratings in a company's valuation because they're based off actual numbers. These sort of announcements, there can be a lot of uncertainty about how much it is going to benefit the company in the long term. It may not benefit the company at all. So they say $4 million of additional contracts, but what's the margins? $12 million of total contract value in the 4 months since product launch. But again, what's the margins, that sort of thing. And then after a company releases an announcement like this, and I see the share price up 11%, the next thing I do is have a look at the chart. Is this a breakout? And if it's a breakout, I might ignore my bias against these announcements. And this is not a breakout. Share price in a downtrend, and the downtrend has not come to an end. Some interesting volume though. So we are seeing increasing volume. That means the market is getting more interested in this company as the share price falls, and that could be a sign the company is moving towards what the market perceives as good value. Market cap 61 million. So after today, it would be about 70 million or close to 70 million. Is the company profitable? No, according to this, no. Nice increase in revenue the last few years, but it's not profitable. So it's like GPS. Now we have HMC. I have never had a look at this company before. Real estate. Is this a REIT? Yeah, REIT. And so they did a presentation, but it was this announcement here that released last night that triggered a little bit of interest in me. The Honourable Julia Gillard, AC to chair HMC Energy Transition Fund. Okay, so this company is not the sort of company I would be that interested in. And it's funny enough, the presentation was market price sensitive, but the announcement last night was not. So I had a look at this, and the first thing I was looking at is what does this company do? And there it is, about HMC. Is a leading ASX listed diversified alternative asset manager. I thought maybe fund manager, but asset manager focused on real estate, private equity, energy transition, and digital infrastructure. They manage over $11 billion on behalf of institutional and high net worth and retail investors. So they do have one slide here which tells them or tells us what they're invested in or where the funds under management are located. So most of it, by far the majority of it, is in real estate, $9.5 billion out of $11 billion. Private equity, 0.8. Digital infrastructure, 0.7, and $0 billion in energy transition. So this is all based off, energy transition, the interest in this company today. But at this point in time, it's way too early. And maybe some of the interest in this company is just based off dropping a name, Julia Gillard. So some people would say, I've heard of that name. I know that name. Oh, this company must be a buy. I'm going to buy some shares. So that's HMC Capital up 6. Well, that's the devil's number. Up 6.66%. If it drops 100% tomorrow, we'll know that the devil's number is real, won't we? Okay, so let's have a look at the chart. As I do. Is this time to get excited? To be overall, if you look at this chart in its entirety, it's actually not a bad looking chart with a nice little dip and the share price starting to rally, but this is not a real breakout in my opinion because the share price was higher not that long ago. If the share price didn't rally, if it just went up sort of along the moving average channel here, this would be a much more interesting chart. Market cap is 2.7 billion, no, 2.3 billion. P ratio is 40.8, dividend yield 1.9%. Okay. Pretty sure I do have this company in my, I have this company in my funds and LIC watch list. So maybe it should belong in my REIT watch list. I've never looked at this company before. So that's HMC. What else do we have? GQG, a company I'm trading right now, released their funds under management. Share price is flat. Funds under management, it was actually down, but there were net inflows. So funds under management down from 143.4 billion to 142 billion, but there were net inflows of $6.3 billion. And that's the thing you want to look at. And let's have a look at the chart quickly for GQG. Share price is still in an uptrend. It's not, still an uptrend, a nice uptrend. Yes, and I should have bought shares back here in January, mid-January, when I did break out. That's when I should have bought shares if I was following this company a little bit more closely. And a very illiquidly traded company, Briscoe. I think I might have mentioned this company once in a video previously. They did release their first quarter sales. It was okay, but look at the buyers and sellers. There's one buyer at 425, one seller at 447, another seller at 580. No trading in this company. The last time shares were traded was the 1st of May. Before that, the 26th of April. Before that, the 8th of April. And I would say that this company is listed on the New Zealand Stock Exchange. There it is, New Zealand Stock Exchange. And I'd say it's much more liquidly traded there, yeah. And there was no reaction from the market in New Zealand. They didn't care about this sales. I have two announcements that were released last night that I was going to mention. First one was Quip, Quantum Intellectual Property. They are going through a possible takeover, and they've had released 3 updates in the past few weeks. And this is just them saying, we're going to give the person who wants to take us over a little bit more time to go through our books. Share price is, or the chart looked absolutely stunning before this takeover. Yeah, this was an absolute. So I was trading this, bought it $1.05 on a breakout, beautiful breakout, sold at $1.62 like a month later on the first takeover bid offer. Share price is a little bit higher now, but it's okay. It's okay. I'm always going to take that sort of profit. It was more than a 60% profit, about a 60% profit in a very, very short period of time. Another company I might have done one video on in the past called Candy Club Holdings. It was like a candy company selling candy or lollies in America. If I remember correctly, they went through receivership or administration. I'm trying to find it here. It might have been a long, long time ago. In fact, I can tell by trade history. Okay, they haven't been traded for a while. So they went, in fact, we can look at TradingView. Last time they were traded was in October 2022. So 18 months ago, that's when they went into administration. And it seems like they're coming out because they're acquiring something called Scalar Partners. I thought that was a law company when I saw it. I went, yeah, that's not a good acquisition. So Scalar is in corporate advisory and financial services involving supporting, advising, investing in innovative technology businesses with global technology potential. The market cap of the company, once they do this or relist, is going to be 26.5 billion. More than likely, current Candy Club shareholders will be highly or heavily diluted. That's what happens when these companies do this sort of thing. So going from a candy company to a corporate advisory and financial services company. So when they actually do start trading again, I'll have a closer look at the company and maybe their prospectus. Okay, so that's the honorable mentions. Now let's have a look at the top 5 announcements of the day. One company that did make it into my honorable mentions was a company I'm trading. So I will actually show you the chart of that company, but they're just going or telling us they're going to production, I believe. Yeah, why not talk about Auric Mining? They released an announcement, gold from first campaign of 2024 delivered to Perth Mint, which is okay. I had a quick look at their presentation and their plans for the next 4 years. And then I had a look at the chart and I went, oh, the share price has dipped back. Well, I'm liking the chart. I'm liking this chart. The share price has dipped back and I bought on this dip. So I've bought on this dip. And again, the share price will be correlated to gold prices. But then I had a look at the market cap. Well, the market cap is really low, $26 million for a company that could generate quite a bit of cash in the next 3 or 4 years. And the other thing that I liked is the increasing volume as well. Really good volume coming in since November last year when the share price broke out. And of course, when it broke out back in November last year, I wasn't following this company at all. Now let's go back in time here. This is the breakout right there. In fact, some really good volume coming in, Auric Mining, in November, December. That was the time to get excited buying. You could have bought about 26 and 7 cents and have doubled your money since then. But I think there is potential more for Auric Mining. So I have taken a position, a small position, and then I might add to my position if the share price keeps rallying. And I see maybe another dip. Maybe that's when I could buy some more shares in this company. So let's have a look at the top 5 announcements of the day, starting with SKS Technology. Ooh, Technologies Group. Oh, share price is down today. Okay, they released an announcement. They have won $11 million of defense contracts. And this is for the RAF Tyndall base or RAF base in Tyndall, Northern Territory. I do know that base because we actually have to do some forecasts for that base. I'm an aviation meteorologist, and I sometimes have to do a forecast for that base when the base meteorologist is not on base. So I do know that area. And Matthew Jenks, the CEO of SKS Technologies, says some interesting things here. He's the only CEO who has got in contact with me. So I will always think highly of SKS Technologies simply because of Matthew Jenks. Now, I just wished I thought highly enough of this company to buy shares, because this is the chart. And this is the only reason I've included this company onto the top 5 announcements of the day is because of the chart. Absolutely brilliant chart. If you're a shareholder, I wouldn't necessarily be buying it right now because it has run up quite a bit. In fact, the share price has almost quadrupled in the last 6 months. It's gone from about 20 cents or even below 20 cents to a high of above 80 cents. And you can just see the acceleration in the share price or the exponential rise in the share price in the past month or so. So I believe there is probably a little bit of fear of missing out, FOMO in this. And I wouldn't be surprised to see the share price pull back. Market cap, not that extreme, 86 million. They have a dividend yield, but it's fairly low. Price earnings ratio 40.9. But maybe announcements like this or contracts like this will help SKS Technologies grow into the current valuation. So that's potential. So SKS Technologies has made it into the top 5 announcements of the year simply because an okay announcement, nice announcement. I'm a little bit surprised the share price got to a high of 82.5 today. So we have seen a little bit of selling today. So I think this is just the selling because the share price has quadrupled in the past 6 months. All right, coming in number 4, we have the first of the profit downgrades, and that's Sims Metal. Sims Limited, I mean. I thought they were called Sims Metal. That's probably why it was SGM. I don't know where the G comes from. All right, so a trading update. And whenever a company releases a trading update, no matter what I think of the company, I'm going to read the trading update. It's the one type of announcement I will always read. It could be titled a little bit differently. It could be profit upgrade, profit downgrade, market update. Those sort of announcements I will always open because they are the most powerful type of announcement. And when I say powerful, I mean going up or down in terms of share price. And a lot of times you will see share price move significantly on either a positive or negative trading update. We saw that yesterday. Tourism Holdings released a profit downgrade, which is the trading update. Share price fell, what was it, 37% in one day. And that's why the share price has rallied today, because more than likely, the shares were oversold a fair bit. And a lot of investors see the share price down 37%, and they come in the next morning and go, I can get this company much cheaper. But it remains to be seen whether this bounce in tourism holdings can maintain. I could have a look at the chart later in the video. Anyway, so Sims Metal released a trading update, and this was negative. We know by the share price down 6.6% now. So this will definitely now be on the worst performing companies on the ASX. And it was down. And you can see that just in the first, well, not the first paragraph, the second paragraph. The company anticipates underlying EBIT in second half of 2024 will be marginally lower than the half year 24 financial result. Not sure if this was a profit downgrade, but the market didn't like it. They didn't like the words marginally lower than previous corresponding period. They do go through what's happened or what's caused this. And the main thing when I go through what has caused this downgrade or these bad conditions, is it structural or what I mean by structural, is it something wrong with the business? Is it something the business or managers can't control, like weather? Or is it just a one-off? Is it a great example is, what's a good example? Chipotle had some food poisoning. This is many, many years ago. Had some food poisoning, and then the share price absolutely tanked. I wonder if I could see that. I can show you that. Chipotle. I wasn't a shareholder, but I do know this happened. I'm trying to remember exactly when it happened. It might have been could have been here. Could have been back in 2015 when the share price just fell significantly. And that was on the back. I think it could have been there. Could have been somewhere around there. And the share price just fell significantly on the back of some food poisoning. But that's not a real problem with the business. But a lot of people thought, well, no one wouldn't want to go to Chipotle anymore. That's not right. And it's sort of the same with when companies have been attacked by they get people's, like Medibank had their what do you call it when the computer people break in, hackers got all the members' information, and there was a panic, and Medibank shares were sold fairly quickly, harshly, you can say. I definitely remember this because I was thinking, should I buy some shares in Medibank? Here it is. This is what happened. So this was on the 26th of October 2022. Share price of Medibank dropped 18% on the back of this hack. And the share price didn't fall much from that. In fact, it recovered back up to where the share price was in about 6 months. That was just a one-off. That wasn't something really wrong with the business. But a lot of people thought everyone's going to leave Medibank. But that's the time to become a Medibank member, is because they've had this issue sort of like just after 9/11 when we started flying again. That was the safest time to fly in history. I had people who wanted to visit me who said, no, I can't fly. It's too unsafe. And I was saying to them, it is the safest time in history to fly right now. We are not going to see another terrorist attack like we saw because security was insane. And just like with Medibank, we would not see another hack. In fact, Medibank moving forward would be one of the companies that won't be hacked because it happened to them and they've already been hacked. So really safe. And the share price recovered. So that's what I'm looking for in terms of when a company's share price falls a lot. And I think it's just a one-off. There's no problems with the underlying company. It's not something the company can't control. Now, in this case, they couldn't control it, but they can control the aftermaths and what happens after. I know. So I'm rambling on a little bit. In fact, Medibank's share price up 5% today. That's a pretty big move for this type of company. Anyway, so let's go back to Sims Metal. I just want to call it Sims Metal trading update. And let's have a look at what caused this negative guidance. Okay. Sims substantial sales revenue, market dynamics associated with the timing of revenue recognition, freight costs, and the competitive environment for scrap metal purchases over the next 2 months pose upside opportunities and downside risk to this guidance. Well, that's to the guidance, not what's caused challenging conditions. So ongoing market challenges have continued across the industry. Increased challenges compared to the first half. The North America metal facing similar market challenges. but they anticipate an improved second half. I ignore when managers say we anticipate a better second half because there's a lot of times they have no idea. They just hope it's better. The negative sentiment surrounding global steel markets continue to soften export scrap markets. Domestic scrap prices followed, or US domestic scrap prices followed. Intense competition for scrap intake. So a lot of these things Sims Limited does not have control over, particularly competition. Maybe even some of these margins, which is affected by competition. Yeah, they have no control over that. Maybe even freight costs, they probably don't have much control over that unless they get involved with the mob, and the mob can take control of their competitors, take them out. Anyway, of course, they will never do that. So Sims Metal is not a high-quality company. A high-quality company would never mention competition because they don't have competition or very limited competition. So let's have a look at the chart for Sims Metal. And this is an ugly looking chart. So there's no reason to be in this company at all before they release this negative trading update. But is this opportunity? And you can see way back, share price is at a 3-year, almost a 4-year, almost a 4-year low. So I have traded this company in the past when conditions were better, when they had tailwinds. So it would have been back here. Back in late 2020, early 2021, I was trading this company because just look at the chart. Chart is completely different now. I don't see any value at this point in time. So that's coming in number 4. Coming in number 3, we have the company with the easiest ticker code to remember, Titomic. Share price up, 20.97%. It was up over 40% earlier. Share price opened at 6.6, went to a high of 9.5, now has dropped to 7.5. Is this an opportunity? Possibly an opportunity, maybe not. The chart does look interesting. So here's the announcement that caused excitement in this company. Titomic TKF system sold to Triton Systems. Means absolutely nothing to me. But one of the reasons why I wanted to include this company in this video is because I'm just intrigued by what this company does. Okay, so Titomic, the world's leading provider of cold spray solutions, no idea what that means, is pleased to announce the strategic sale of a custom Titomic kinetic fusion system. Well, I know, well, I know what some of the words mean, but together, no idea. Titomic's kinetic fusion technology. In development of applications for use in ground, air, space, and sea systems by the US Department of Defense, as well as commercial aerospace, industrial, and power generation markets. So whenever I see something I don't understand, I become interested. So what I did is I went to this About section. They talk about Triton Systems and Titomic. They specialize in large integrated solutions for industrial scale metal additive manufacturing using its patented cold spray additive manufacturing, Cold Spray AM. Let's have a look at what Cold Spray AM is. I'm pretty sure that is additive manufacturing. I could be mistaken. So let's have a look. And there is actually a Wikipedia on cold spray additive manufacturing. So let's have a look what this is. In fact, CSIRO has Cold Spray Metal Industries. So let's learn something new about something I have no idea existed until right now, until I saw this company. So also called Cold Spray 3D printing. They sort of hinted at that in the announcement, I think, is a particular application of cold spraying. Still don't know what that means. Able to fabricate freestanding parts or to build features on existing components. During the process, fine powder particles are accelerated in a high-velocity compressed gas stream, and upon the impact on a substrate or backing plate, deform and bond together, creating a layer. Yes, goes back to the beginning of the 20th century. So this is an old technology. Okay. Applications. This is what I want to see. Applications. Propellant tank additive manufacturing, exploring the advantage of the process to deposit titanium and titanium alloys without melting the feedstock material. And there's a few other ones here. The cold spray additive manufacturing process is also applied for additive repair of gearboxes and other aircraft components. So there are quite a few applications for this type of technology. Now, the next thing, equipment producers, Speed 3D. There's Titomic. actually in this particular announcement or this particular Wikipedia page. Okay. So the next thing about this company, I just wanted to see is, do they generate any cash flow or just receipts? So here is the latest Appendix 4C. So over $2 million of receipts, and it is increasing, because $6 million in 9 months to date. Operating cash flow negative, and more than likely free cash flow negative as well. Without doubt, free cash flow negative. So definitely a company to keep an eye on in the future. So the next thing I want to look at is the chart. And actually, the chart did surprise me. I expected the chart not to look this interesting. There is the chart. So the share price was in a downtrend, found a bottom at around about, we'll say about 1.5 cents, or just below 2 cents. And the share price has moved into a really interesting looking uptrend. Increasing volume, and the volume started to increase in July last year. So preceded, right on the start of the consolidation period, so preceded the price rise. So I have heard and read this a fair bit now, that a lot of times volume precedes price, which is interesting in itself. Not always, but sometimes it does. And yeah, a really interesting trading today. That is sort of a little bit of a bearish one-day candlestick, because share price got as high as, what was it, 9.5 cents, now down to 7.5 cents. Share price high, 9.5 cents, down to 7.5. Interesting company, but definitely I'd need to do a little bit more research on this company, but market cap is now 60 million or so. In fact, the market cap probably is more than 60 million. So I'd say 72 million now. 77.8 million according to Market Index. There you go. So that's coming in. At number 3, we have Titomic, a company I have heard of before, mainly because of the T code, but I had no idea what they did. Now I do, but it's still, most of it just goes way over my head. I am not that intelligent enough to understand exactly what they're doing. If you do, leave a comment in the comment section of this video. I'd love it. Coming in number 2, we have Lindsay Australia, which was a bit of a market darling a few years ago, but maybe that market darlingness has come to an end because the company has released a profit downgrade or a trading update, or negative trading update, we'll call it. They released this after market began, and luckily enough, I actually did see this before I went away and did some other stuff. I don't usually look at announcements that are released after 9 or 10, after market opens, until much later in the day, even after I start this video. Anyway, so this is negative, and they do have some reasons. So again, what am I looking for here? Reasons that could be just one-offs. Some little problem with the company that they can easily fix. No structural problems, no problems that the company has no control over. So forecasting EBITDA to be between 88 and 94. So not sure if this was a profit downgrade or if this was just numbers that the market thought would be higher. So factors impacting second half: lower horticultural volumes in seasonal products caused by significant and persistent wet weather. So straight away, that is something the company cannot control. Conditions impacted all Lindsay business units and products, particularly North Queensland. So does that mean if we are moving into a La Nina, that can be harmful to Lindsay Australia? Potentially. Multiple rail disruptions, including a major 4-week east-west corridor outage commencing early March, followed by subsequent disruptions in April. Have no idea what's happening there, but is that under the control of the management? Probably not. Disrupted freight flows and volumes impacting operational efficiency and utilization. Why is there disruption? I have no idea. Okay, so what else did they say here? So following the Easter period, Lindsay anticipated a rebound in volumes typical of post-Easter trading. However, volumes remain subdued, still affected by soft demand and adverse weather conditions. Again, soft demand and adverse weather conditions is something the company cannot really control. They might have slight control over soft demand. Maybe they can decrease the prices. I have no idea. And this is a problem when management of a company anticipates having a better second half. Sometimes it doesn't happen. This happened to A2 Milk quite frequently a few years ago when they anticipated better conditions, and those better conditions never came. Despite these short-term challenges, the outlook remains positive. Yeah, sure, outlook remains positive, but doesn't mean it is going to be positive. And they actually fact, they talk about favorable soil moisture profiles and water storage. Refrigerated logistics sector will continue to be supported by increases in population and immigration growth, changing consumption habits and demand for efficient rail and rail services. Well, based off this made to multiple rail disruptions, this efficient road and rail services is not happening. Okay, so let's have a look at the chart for this company. And I'm going to tell you right now, this was not I don't think anyone should have been in this company at this point, because look at that. The market was hinting this was going to happen just by looking at this chart. The share price fell below a support level, a support zone, a few days before this profit downgrade. Now, there has been some buying today. Share price got as low as 84 cents. That could be a positive, but that could be just people thinking, investors thinking there's value in this company now, because the share price was significantly higher just a month ago. Share price was $1.20 a month ago. Share price now is 90 cents. It's 25% lower. There's some value in this company. Maybe not. And you can see this was a market darling back here. And someone did say to me that one of their refrigerated logistics or transport logistics competitors went broke, and Lindsay Australia did benefit from that. Definitely true. But I think the tailwinds behind this company have come to an end. Okay, so that's Lindsay Australia. I think I always do that, don't I? When I finish talking about one company, I say okay. Okay, there we go. So coming in number one, it shouldn't be a shock to you if you've been watching this whole video, is AGL. And funny enough, this is the first time I've ever bought, what was it called? So averaged up, averaged down. Yeah, averaged up into position, bought some more shares. I bought it $10, right on $10. So both my positions now up. So average my whole position in this company, I think it's $9.50. So I will have a look at the chart, and I'll tell you why I initially bought some shares in this company a week or 2 weeks ago. So updated financial year 24 guidance. And funny enough, when I saw the title of this announcement, I went, oh no. This happened before with DGL. I bought shares just based off the chart, and the company released a profit downgrade, and the share price fell 30% in one day. I went, oh, is that a reason not just to trade on the chart? Wait for some positive financial news. And I was thinking when I saw the title of this announcement, oh no, this is going to be bad. But I'm hoping the market was right. I was thinking the market sees something with AGL, and that's why I took a trading position. Definitely not a long-term position in this company, but I'm hoping share price could double from here. Best case scenario, double. Okay. I do say that a lot, don't I? Okay. I'm going to try to say that word not as often. I just realized I think I say it a lot. It's probably a substitution for and that sort of thing. Do I say a lot? I have no idea. AGL has today updated its earnings guidance for the financial year. And when I read the next two lines, my heart's just, my concerns alleviated, because this is a profit upgrade. Exactly what I'm looking for, a profit upgrade. Not only underlying EBITDA, but underlying NPAT, increasing from between 680 to 780 million to between 760 and 810 million. So this is a true profit upgrade. Some people might say, well, before the top of the expected profit was 780 million, and the bottom of this updated guidance is 760 million. So there's a possibility the company misses its expectations if they get 760 million compared to the previous expectations. But I think you're going in a loop here, because this is an upgrade when you look at the range. We look at the range. So why is this an upgrade? The update to guidance, and companies, when they do upgrade guidance or downgrade guidance, should give reasons. If they don't give reasons, I would almost immediately eliminate that company from future buying. Okay, the update, I said again, the update to guidance reflects the continued strong operational and financial performance of the business since the half-year results, this is what most important thing, due to improved plant availability, which is interesting in itself, flexibility in generation, higher consumer demand, which they probably don't have control over, because that higher consumer demand is because of the summer period in New South Wales and Queensland. Now, you could say higher consumer demand, air conditioning, summer, climate change, it's going to get hotter and hotter, So this increased consumer demand might continue into the foreseeable future. Possibly true. And continued strong customer markets performance. I have no idea what that means. Now, all guidance is subject to any impacts arising from regulatory and government intervention. And let's hope that does not happen. Variability in trading conditions and plant availability. That's interesting in itself. And investor inquiries is James Thompson. I don't know why I said that. I just know someone with the name James Thompson, but it's not the same person. Okay, so let's have a look at the chart for AGL and why I initially bought some shares in this company. Okay, so the share price of AGL was in this downtrend. So that started around about the 1st of August last year. Share price got as high as almost $12.50, and when it was low as below $8 in February of this year. The company must have released their results on the 8th of February. Share price on that day bounced 10.3%. But that was not a breakout, just because the share price had been a downtrend. And you can see the share price really struggling after that. But the share price started to move up back in early April, so about a month ago, and we had a really good day. A really good day on the 17th of April. Share price rose 6.4%. And that was a bit of a breakout. It wasn't the ideal breakout because the share price was only at a 3-month high at that point in time. I prefer a 6-month high. But I did take a position in this company on the back of this little breakout on the 17th of April. So I did sort of ignore my rules. Now, my 6-month high or share price high is not an absolute rule. I have on occasion broken that rule, and this was one of those occasions. And I just expected, because the share price was trying to rally, we saw some nice little strength in the share price. I bought some shares on the back of that, and I think the market was right. And yeah, this is a breakout. Now, again, not a true breakout, because at $10, and that's when I bought some shares, at $10, the share price is at November. It's almost at a 6-month high. So it's about a 5 and a bit month high. So it's approximately 6-month high right now, and just a profit upgrade. I'm always going to think about buying a company that do release a profit upgrade because it's a bullish sign. It's a good sign. Now, it doesn't mean the share price of AGL will continue to rise from here, but there is a higher chance it will because of this upgrade. I have on occasion bought into these sort of setups, and they don't work always, and that's very important. These are not 100% foolproof rules, but it just increases your probability of success if you have rules and you follow those rules. And those rules are successful if you backtest them. I have backtested this, and it does work quite well. Oh, not going to say it. Let's have a look at. No, we're in the closing auction. Oh, that doesn't mean the share price will close at 96, but it's okay. $10 is a very important level. We want to see AGL share price remain above $10 because it's a very psychological level, round number. It's like $1 is like 10 cents, or 1 cent is highly important psychologically. 10 cents is very important, highly important. $1 is highly important. $10 is highly important. $100 is highly important. Psychological. For some reason, investors love round numbers, particularly those 10 cents, $1, $10, $100, $1,000, but we don't have any company on the ASX at $1,000. So I want to see the share price just get above $10, but I'd say there is a little bit of selling. And in fact, if you have a look at a chart today for AGL, I would say the share price has straddled $1 or $10 throughout most of the day. So let's have a look at the 1-minute chart. Yeah, it has. It has. There's $10 right there. It got to $10 at about just after midday, 12:25, and it's been going up below $10 ever since. Went down as low as $9.90, about $3.20, but then has rallied up again. And let's hope it finishes right on $10. Doesn't have to be. I think there's a chance it will open up tomorrow because as fund managers put in the new numbers, they might think, or they might upgrade their price target for the company, and that would be good moving forward for AGL, unless they expected this. Anyway, that is all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.